Hello, everyone. Welcome back to Edwards Trades. I'm here again to talk about the CPI data that came out this morning, and as well as give my overall thoughts, prediction, analysis on the overall stock market, the SPYs, the QQQs, as well as the core list of companies. Today's video is going to be fairly short and simple. I'm just going to be mostly discussing about the CPI data that came out this morning at 8:30, what the numbers revealed, how the stock market reacted to it, so on and so forth. So right now I'm going to bring up the article and briefly explain exactly what happened in today's session in the market. So let me go ahead and pull out the article real quick. All right. Let me see if I can move it on over here. Perfect. So hopefully you guys can see this, but basically what the numbers revealed this morning is that inflation is still not under control. Compared to the last report, inflation rose about 3% from 8.0 in the August report to 8 point excuse me excuse me about that, apologize, to 8.3%. And as you can see here, what mostly carried the sector, not carried the sector, but what mostly was a big factor was energy. Food and energy are actually mostly energy, rose drastically. And as you can see here, CPI for all items rose about 0.1% as of from the August report. So now the overall percentage is about 8.5%, basically meaning that what this basically is detailing is that the fact that inflation is not under control. Clearly, the energy sector is still dominating in terms of the broad market, which means that the risk on investments like the tech sector, which I'll talk about just now, um, got brutally hit because the inflation report that just basically implies that the Federal Reserve rate are going to have to be add more interest rate hikes, I should say, about probably another 0.75 basis. In order to control inflation, the market has to suffer, the stock market as well as the housing market. So again, that's not a good sign in terms of investors who are into the tech sector, which are more the riskier settlement. They're now moving towards energy because that's clearly what is the major factor of driving up inflation. And if we take a look at the SPY and the overall market reaction, the tech sector, as you can see here, today's session was a overall gap down in the pre-market on 8:30. If we want to go to the 1 hour time frame, basically we had this false bull flag here scenario, but the market gapped down after finding the news right around here, around right here. We gapped down. Let me go to the 5 minute here. Yeah, basically this was this morning, right around here. It's not going to show here, but right 9:35, the market gapped down during pre-market hours, and the market basically just dumped all the way down. And from a daily perspective, clearly all this momentum that we gained for the last week during Labor Day weekend is clearly lost, and sellers are back in control of the market. So what does that mean in terms of the future of the rest of September? All that basically means is that we're back into bear mode, bear territory. We did close under this major support level of 3932. And because we closed under this, I would basically say that we're kind of in a bear territory, bear market mode. We're probably going to be seeing more selling pressure if bulls are not able to hold these levels. But because of the fact that it's been playing out this trend line perfectly, and we even rejected these lines here. I mean, it's just clearly simple that since inflation is not under control, these numbers are not getting any better. That the Federal Reserve rate has to implement more interest rate hikes. Clearly, the market did not like that reaction, and everything dumped this morning. All tech sectors fell over. It was on the news. If we go to the SPY, where is it? Yeah, we take a look at SPY again. We just pretty much just gapped down after the news came out this morning, and we basically went right back where we started from last week's trading session in just one day. And this downpour, as you can even see here on the bottom of the screen, this amount of selling pressure today was absolutely insane. 122 million selling pressure took place here. So bears were clearly in control of today's trading session after, of course, the news came out fairly bad. And basically, in my last video, or my most recent video that I posted Sunday, I said that this was pretty much a guaranteed setup. But the last leg here before we go reach new lower lows would be if we break 393. If we break 393 as we held up during last week's trading session, if we break these levels, we're possibly going to see more downside. But there's more economic news coming up later this week, as well as we're waiting on Jerome Powell to speak next week. Depending on what that news outcome plays out to be, I wouldn't be surprised if the market has a dead cat bounce tomorrow because of the amount of selling pressure that took place today. But more of the story is that inflation is not under control yet. As you can see on the hourly time frame, we dropped heavily during this morning. Pre-market, we just immensely dropped. So we'll see how low the market will go later tomorrow, if anything. But like I said, this whole momentum that was gained here was just completely lost in one day. And if we go to the QQQs, it's pretty much the same thing. Market just completely fell over and dumped. I mean, it was just a brutal mess today in the tech sector. We just rejected 313, which was a double 313 here, which is prior resistance, dumped all the way through. What was gained is now lost. Bears sellers are completely in control. Bulls got trapped. Bears are back in control. And we'll see if the Bulls are going to be able to hold, since we closed down 296, the next level I'm possibly seeing would probably be right back down to 287. So we'll see how the rest of the week plays out. But for this week's trading session, just a brutal sell-off that took place because of that news this morning. So yeah, that gap down, and we're back down to these lower low situation is not good. And like I mentioned in my other video, clearly we're still back on this overall downtrend on the daily. As I mentioned in my video Sunday, I kind of theorized that this was just another lower high situation continuing the downtrend. So again, from this point here, high, lower high, another lower high, and then again you have your lower low. You have your low here, your lower low here, and now we're possibly waiting for another lower high here, maybe a retest of 303 levels, quite possibly, and another drop back down. But yeah, back into this, I guess these lows here in this sideways consolidation phase. Again, the market just reacted negatively towards it. Bulls or Bears were completely in control. So now we're just waiting to see if we continue to drop all the way to 87. And if we keep dropping down, the selling pressure takes place and the rest of the year could be, bearish. But until inflation is under control, the Federal Reserve rates are still going to implement interest rate hikes. And that's what the news report revealed this morning. So yeah, that's all I wanted to talk about in this video. So we'll see how the market reacts to the rest of the week, but I'm expecting more downside. Tomorrow morning, maybe a little bit of a dead cat bounce, reject 296, and then continue to fall over. So yeah, that's kind of my outlook for this week. And I hope you guys enjoyed this video. Leave a like, subscribe, comment if you guys have any questions. But yeah, we'll see if the Bulls can recover after this, pig slaughter, as they say here. But yeah, guys, hope you guys enjoyed today's video. I'll see you guys this weekend as I'll post the overall weekly update, and we'll see how the market goes from here. Alrighty, guys, peace.